how do you sell at the top when things are looking really, really rosy? And by the same token, how do you buy at the bottom when things look dire? And most private investors can't get that right. And as a result, Vestac just avoids the commodity sector in general. It is worth noting that the headwinds for commodities at the moment is the push to go green. So anything that's not green is not doing well. But as you say, the likes of platinum and rhodium and those type of metals, those are part of the green revolution, and those will have a tailwind. So if you are going to go into commodities, you want to be in the ones that are going to be used a lot in our push to go green.
I'm going to leave the question on Bitcoin for another conversation another day, Michael, because who knows where the thing is going to go. I mean, I'm just looking at it now. We're now talking $36,000. This is a product that's been down as much as 21% today alone. Scary. Michael Trahan, thank you, Portfolio Manager at Vestac. Let's take a look at global markets, and when we come back, we are talking about Africa. Welcome back. You're watching CNBC Africa. We're live for the first time this year on channel 410 on DSTV. So we're watching, obviously, our markets here in Johannesburg. As you saw, we've started the year very strongly indeed, sitting at a record level in terms of intraday trading as well as on a closing basis. Let's see where the market closes today. On the rand, however, that currency has been under pressure. I saw Wayne Makari earlier on today talking about value lying somewhere between 14 and 15. Let's see where that goes by the time we end 2021. Now, the COVID-19 pandemic has, of course, accelerated the need for technology in our everyday lives, with artificial intelligence having a strong impact on the global economy as well as on our economies here in Africa. A report conducted by PwC last year shows that AI could grow by as much as $15 trillion by the year 2030. That was last year. In Africa, we need, of course, to look at how we can also be part of that growth. Where are we going to get it? Joining me to discuss Africa's potential in the AI space is Mutari Ardenan. He's a partner at Exceed Ventures and Exceed LLP. Mutari, thank you for joining us. Thank you for accepting my invitation after we met on the big World Wide Web, which can be good depending on how you use it, or if you use it like President Trump, it can burn you. Let's talk about this AI world that you are talking about. I want to know how big a space Africa's contribution could potentially be, and then we'll move into the second part of the question, which seeks to understand what we need to do in order for us to be full and able participants.
Yes, Godfrey, thanks for having me. As you pointed out, the AI is forecast to add between $13 to $16 trillion to the global economy, according to likes of McKinsey and PricewaterhouseCoopers, across industries from biotech to finance. Africa could potentially add up to $500 billion this decade to its economy if by extending AI to, say, financial services, to the unbanked, which could add about $4 trillion globally to the unbanked, which is about $2 trillion to Africa, to improving productivity in Africa's mining sector. So And Africa has intrinsic advantages, not least is it because of its large population of 1.3 billion people, which translates to more data to train AI algorithms across in Africa.
Yeah.
And conversely, if Africa is behind the curve in AI,
Yeah.
African firms will be outcompeted. So, for example, Oxford University reckons that 85% of jobs in Ethiopia are at risk from automation elsewhere.
Sure.
Due to automation. So it's a double-edged sword. It's an opportunity and a challenge to Africa at the same time.
Right. So let's talk broadly, and we're talking broadly here about what needs to be done for us to be able to ensure that we don't see the other side of the blade. We only see the one that we want, which of course is where the advantage lies. From your perspective, is that work that needs to be done at the AU level, or is that at the national government level, or do we simply need to create the ecosystem and environment for our companies to be able to be active and succeed in this space?
Well, currently, we need to, only one country has an AI industrial policy. So we need an industrial policy similar to China's. Across Africa, I'd prefer, because the competitive advantage comes from having the larger the population. In AI, you can have two advantages. You can have AI supremacy in two ways. One is through the design of an algorithm, like in the US. So they're number one in AI because their algorithms are superior.
Yeah.
Then number two is China, which has a lot more data. So it has a lot more people online. It has 700 million people compared to US's 200 million people online.
Yeah.
So for Africa to compete at the moment, we're probably better off looking at our population, harnessing our internet population, which is 500 million people, more than the US. If we can harness that, and that means a harmonized regulation across Africa, so we can have seamless data moving around the countries, and also an industrial policy that's harmonized as well, similar to China's. It's done before. China has become successful in it. It's now number two from nowhere a few years ago, and in some areas it's superior, like facial recognition. It's the world leader.
Absolutely. And I saw earlier on, was it actually today or yesterday, that someone was saying that this drive against Jack Ma's company is actually part of a bigger cleanup that's intended to establish China as a leading voice in technology going forward. But I wanted to ask you, from an Africa perspective, do you see us being able to match the progress that we're seeing in China? And then secondly, how do we get the private sector to be a full participant in the industrial policy formulation that you were talking about?
Yes, certainly. So that's a very good question, Godfrey. So we, Zaxed Ventures, Africa's first AI fund, it's an impact investor. We're fundamentally a data AI firm aiming to press forward Africa's AI economy. In much the same way Tencent and Alibaba are in China. So they are, it's a public-private partnership between the government, being led by Tencent and Alibaba in China, or Google in America. So principally by driving up the AI investment rate. So currently the per capita investment rate in Africa is just 1 cent per capita. In China and the US, it's $155.
Sure.
So and the way one of the ways we're doing it is by making our neural network AI platform an open platform for investing.
Sure.
So for co-investing. So this basically entices co-investors to invest in the industry because the platform gives them unprecedented risk management capabilities, bias elimination in investing, and cost savings up to 40%. So we're driving the investment rate from the abysmal 1 cent per capita to much closer to the $155 that you have in the US and China. So that's what we need to do, and that's our focus. Obviously, and also this has to be done in tandem with the government. So in most cases, AI is led by the private sector and working with the government. So in Tencent, in China, it's Tencent and Alibaba, as you mentioned earlier. In the US is Google, etc. So yes, so we have to work with them to make our platform for drawing co-investing, investing alongside us, easier for investors to invest. So the key is getting the investment rate up. That is the key, the key issue now.
Absolutely. But Harry, let's leave it there for today. Thanks very much. And I'm hoping that this is the beginning of a deeper conversation into this, because clearly there's a lot more that we need to get into to try to understand what needs to be done and how we can accelerate that which needs to be done. Mutari Adnan is a partner at Exceed Ventures and Exceed LLP. We're going to take a short break and then come back and talk about the outlook for the South African markets, where there are so many themes that are running through this economy. Honestly, it's going to be difficult to understand where the money goes this year. After this break.
Hello, my name is Kirtana. I'm Engineering School Officer here at Curtin University, Dubai. Studying engineering in Curtin University is like a dream come true.
We have our own standalone state-of-the-art engineering pavilion nested in the heart of Dubai's Silicon Oasis.
And it's just a few minutes away from the main campus in Dubai Academic City.
Our curriculum is based on practical training. A project we recently had to complete was a solar station. We created a skill model with photovoltaic solar panels, wood, inverter, battery, and wires.
To bridge the gap between the real world and the classroom, our engineering curriculum also includes a mandatory 480 hours of exposure to professional engineering practice, which focuses on industry-oriented training.
These visits and lectures serve as a platform for acquainting us in the industry.
Up till now, we don't know the policy of this administration.
Cost efficiency within the business, that appears to have also improved. Is that something that you think they can sustain going forward?
Still much more bullish on the two banks.
Nigeria swings whichever way the Feds and the US swing.
Most of the movements are really not based on NPR.
Meanwhile, the Supreme Court in London will hear an appeal by Nigerian farmers and fishermen to pursue claims in the UK against oil major Shell over oil spills in the Niger Delta.
Closing Bell West Africa is proudly brought to you by Boa Group, unlocking opportunities.
(23:12) is your time. It is the 11th of January 2021. We are live for the first time this year here on CNBC Africa. So we are, of course, trying to understand what the year portends and what potentially the picture could look like by the end of the year. We have seen in the markets there's still some kind of festive cheer, even though there hasn't been the bubbly so far this year. Many investors upbeat, motivated by hopes of more economic stimulus as well as economic recovery, plus, of course, the arrival of the vaccines. So where are we going to be putting our money, and how will the economic fortunes of this country look like by the end of the year? Martin Ackerman is the chief economist at Citadel. And I also saw, Martin, that on your title here, they say you are an advisory partner at Citadel. So I am going to milk all of that very much today. Welcome and a happy new year.
Thank you. Same to you, Godfrey.
So I want to start first with the expected address to the nation by President Cyril Ramaphosa later on this week. We have seen the markets trading at a record. We've also seen optimism in global markets. I want to know what the markets are pricing in terms of the national outlook on the COVID front as well as the global backdrop.
Yes, Godfrey, I think the markets locally and abroad is running ahead of itself for a couple of reasons. The record amount of stimulus that we've seen around the world since middle of last year. You've mentioned the hope on a vaccine that can bring some normality. But, markets definitely at this point in time is fully decoupled from what's happening on the ground. So if we think about what's happening in economies, companies, there's still a lot of headwinds ahead. Most economies are slowly starting to recover. We're still seeing very high unemployment numbers. A lot of the unemployment is structural, which means that even if we get a vaccine tomorrow to each and everybody around the globe, it will take many, many years for industries like the airline industry, as an example, to fully recover. And all of those things will act as a headwind for companies and company earnings. So markets are probably saying, well, in time, these things will come. But where we are at this point in time, we are slightly concerned that, they are running ahead in terms of how long it will take for the global economy and the local economy to get back on track and get back to pre-COVID levels. In other words, 2019 levels.
I know, of course, Martin, that you, like many professionals, believe in the efficient market theory, right? At some point, the market is going to find its voice and find its way. How long do you think that's likely to take, and what will it take to knock sense into the markets?
So I think, the issue at the moment is that, especially if you look at the West, there's no alternative. So putting your money in the bank, in a US interest rate account, it will take 900 years to double that investment. So cash is not safe anymore. Putting it in US treasuries, in other words, government bonds, will take you about 100 years to double your money. So as a result of that, people still end up in equity markets, and that's part of the reason why we're seeing markets going high and high, despite the fact that economies are struggling. And I think where we are right now, there's still a place for a good quality equity portfolio. But I think investors need to be aware that while we muddle through these challenges that we just spoke about, the markets can very easily at some point realize that, they're a little bit ahead of themselves. It takes a little bit longer for the recovery to take place. And we can see whether it's just normal volatility or even some correction that can play out in the course of this year.
Yeah. Martin, I know that you're not a political analyst, but I have to ask you what you think the president is going to likely say when he speaks. He has to speak later on this week because the current Disaster Act, I think, runs until January 15. And I want you to correlate it to the enthusiasm that we're seeing in the markets and whether that perhaps may burst the bubble.
Yeah, I think the president is between a rock and a hard place. I think it's a very difficult situation that we all face. Our new infections as a percentage of the population is quite high compared to other countries at this point in time. And the reality is that, and I think the government realized that we can't afford a full lockdown anymore. That might be the right thing to keep the virus or flatten the curve. But economically speaking, it is totally off the table. So he needs to play with whatever he can do with, regional restrictions, maybe closing down interprovincial borders, trying to prevent this to run away like a wildfire. So at this point in time, given our numbers, we are seeing some relief in the garden route where we had quite a significant wave before the festive season. But I think, if anything, we will keep the current restrictions, and in some cases, he might actually increase some of the restrictions like interprovincial travel. Yep. If you then take that and you say, what is the impact on the economy, locally and abroad? Again, I think the JSE, just like many other markets, are not telling the true story in terms of what's happening on the ground in SA. In fact, I think the JSE is probably decoupled even further, because last year the JSE was simply a story of resources, commodities doing exceptionally well on an economy globally that opened up again and started to recover. But if you exclude the resources, our industrials and financials had a very tough year. And I guess the same will apply this year, because our local companies will only start to benefit and experience a bit of a tailwind if we see the much needed reforms that we've been talking about now for months to actually get the local economy going. Yeah. So on the JSE, our only hope at this point in time is for those companies that got more global exposure the rand hedges, so to speak, that can still benefit from this liquidity rush that we're seeing globally.
Yeah, and I saw earlier in the morning Wayne Makari at FNB also speaking about the levels at which the market is trading, and he was making the point that we are trading at our highest historic expensive levels since 1969. There would be many of our listeners who are listening to this program who were not born before that happened, so lots to be scared about. I wanted to know whether, after what the president did last December, he banned the sale of alcohol, he took us back to level 3, whether that forced you to change your numbers in terms of the economic outlook for South Africa for 2021, or you're still keeping your numbers where they were last December?
Yeah, I think it will depend how long these new restrictions stay in place. What I could pick up from December, what the president said was, it seems like the intention is definitely not there to keep us locked down for too long. They realize what pain it's doing to the economy. It was really managing this wave throughout the festive season, a lot of public holidays, trying to keep people away from, having too big gatherings in terms of social events. So I think, the intention from government side is definitely there to open up the economy, or those parts that are closed down at this point in time. Yeah. So the impact on the economy, same as the rest of the world. This year, we will all benefit from a very low base in 2020. But I do think that some of the numbers will probably be a little bit softer, as we've seen lockdowns in the West and again in South Africa. So we can expect that our fourth quarter number in 2020 for GDP, and probably also in the first quarter, is probably going to be a little bit softer. But I don't think it will derail the recovery, given that we are doing it a little bit more measured compared to at the beginning of 2020. Yeah. So that's on the economic front. I still think we'll be able to post a positive number for this year, 2021, largely as a result of the low base in 2020. But, the vaccine aside, we've been struggling with a lot of structural issues before COVID, and that's where we really need to see progress. For South Africa, 2021 should be the year of implementation. Yeah. We can put that as the heading. That's what we need to actually get the economy going, and hopefully with a vaccine, we can get good traction going into 2022.
Yeah. What's your number for 2021 in terms of GDP and for the first quarter as well?
Well, for 2021, we see a growth for SA around about 3.5%, which is quite strong. But like I said, that's coming off probably a -8 for 2020. And then, unfortunately, we think that we're probably going to taper back to our trend growth, which at this point in time is still only 1.5%. So that's very soft, and that's a reflection of the structural issues that I just referred to. So what we need to get is to create a better playing field for business in South Africa, to rebuild trust and confidence, and to get that potential growth, not around about 1.5%, because that's probably in line with the growth in the population. Yeah. So we're not going to close the inequality gap, but we need to get growth sustainably at about 2.5%. And that will pave the way for us to attract more investments and to reduce our very high unemployment.
Yeah, and your number for 2020?
2020 is probably going to be close to the 8% that everybody expected.
-8.
Given the -8, yeah. Given we had a very strong third quarter, which was very good after that knock in the second quarter. And fortunately, our lockdown or further lockdowns only happened mid-December. So the fourth quarter, give and take, we had a full quarter of economic activity as we did in the third quarter. The fourth quarter will be slightly softer, coming off the third quarter base, but it's definitely going to be another positive. Yeah. So slowly getting there in terms of rebuilding the economy. But like I said, we can't just rebuild the economy to the 1.5 we had before COVID. We need to do more than that, and that's where the implementation and the reforms come into play.
Yeah, so let's talk about the impact that's likely to be felt if those reforms are not implemented. You speak in an article that you wrote at the beginning of the year about the potential coming of the fiscal cliff. I want us to talk a little bit about that. I want to know how far we are from hitting that cliff. Are we a quarter away? Are we halfway, Martin? Or are we talking potentially here something that is perhaps 2 or 3 years out?
Yeah, I guess, we're already in a very, very tight corner. I use the example is as if you're on your Christmas holiday and with your credit card and you just enjoy the party and don't realize that, in January, February, you need to start paying back. And that's where SA is at this point in time. If we look at the rand, yes, over the last week we started to slip a little bit. But that aside, even at these levels, if we look at the strength in the rand during the last 6 months, that's no reflection of what we're facing in terms of the fiscal situation. That's only a reflection of risk on rally globally, a lot of money trying to find an alternative home, emerging markets in favor, the positive outcome around the US elections, the vaccine, all of those things reflected in the rand.
In other words, what could be worse? Is that what you're saying, Martin?
Yes, yeah. So I think, if we haven't had the global backdrop being quite supportive over the last 6 months, the rand should probably, just reflecting our fiscal challenges, be closer to 18 to the dollar. And I guess that is a target where we can get to if we're not going to see the implementation and the execution ASAP. So the February budget next month is going to be another important flag because, you ask how far are we from the fiscal cliff. I don't think it's this year, but it's definitely going to be if we don't do anything in the next 3 years. Yeah. So if we continue down this road where we don't address two things, the expense side of the equation, which is difficult because that includes things like the wage bill. But probably the easiest way is to address the revenue side. And what we need to do there is not increase taxes. We need to do the right things to get the economy going. As soon as we get economic growth, revenue will lift, and that will help us to close that gap between revenue and expenses. Yeah. Then something like the IMF loan that we've got, that's what I've said, it's almost like getting your spending Christmas on credit. We don't even think about it, but that first payment will be at the end of the fiscal framework, so that's 2 to 3 years down the line. And if we don't do the right things now to make sure that we're in a better position 2 or 3 years down the line, that's where I think the cliff will be a reality, and that's where the rand and our bond market is definitely not reflecting that risk at this point in time. And therefore, we do think there's a lot of downside risk in both those asset classes, the currency and the bond market, if we continue down this road.
Yeah, and I think it's important to point out that this conversation around South Africa's finances has been going on for a long time. I do remember, we have to give credit to you economists, because this conversation, if I remember, is perhaps more than 2 or 3 years in the making, because I remember people saying that South Africa is likely to be stripped of its investment grade ratings in time if we do not rein in spending. And the conversation continued, nothing was done, and here we are in edging closer to that D grade. So I'll ask you a question that's more for the political analyst, but it touches you because you have to make those forecasts as well. Are we definitely going to hit that fiscal cliff in your view? And do you see Tito Mboweni and President Cyril Ramaphosa having the political will, number one, and the political capital to be able to turn the ship around?
So I think let's unpack that. The President and the Minister of Finance both fully understand the problem. So I think we can take some positive from that. They know exactly what we need to do to get the country and the fiscal situation on a more sustainable path. I guess the issue to date's been the speed of reform. Don't get me wrong, there's a lot of reform taking place. There's definitely things happening on the ground. There's things taking place today that we wouldn't have dreamed of 2 or 3 years ago with the previous administration. So I guess it boils down to, is it happening fast enough? And part of that answer might be there's a little bit of a political drag in terms of getting some of the reforms through. But in terms of understanding it and doing the right things and looking at the different economic plans, I don't think there's any wrong with that. So it is the speed of the reform that is so important. And that's why I said I think this year the heading for SA should be reform and implementation. In terms of, avoiding the fiscal cliff, I think it is definitely possible. Again, if we look at the current plan from Treasury, they talk about the active and the passive road. So passive is the one that the Minister of Finance warned us about, I think it was already from October 2019, that if we don't do anything, we will end up with debt to GDP north of 100. And then the active one is where they really put in place all the plans that we just spoke about. And that one will stabilize debt to GDP closer to somewhere between 70 and 80. I think if I look at the progress so far and some of the reforms that's coming into place, and then the lack or the slow speed on some of the others, we'll probably end up somewhere between the active and passive, which will still be quite a challenge, but it's fortunately not the worst case reality. But we can avoid it if we, and this is something that you can't do next year or the year after next, it is something that we need to do now to actually pave the way for more stability going forward.
Yeah, you would imagine if, as the Minister of Finance said, you see that a hippo is threatening you, what do? You shoot it, right? Somebody is scared of shooting at the hippo because it's gobbling up all those things. Let's put it in real terms for the guy on the street. Let's talk about what impact that's likely to have on the rand. Because when you speak about the rand, everybody quickly picks up that things are going to be bad or things are going to be okay. So you said if the reforms are not implemented, if you take away the global backdrop, we should be sitting at 18 to the dollar for the rand. If the reforms that you were talking about now are not implemented now for benefits in a couple of years' time, where will the rand be?
Yeah, I think so. We've got a very simple fundamental model on the rand where we look at things like the interest rate differential, commodity prices, economic activity. So that model is just telling you, listen, there's no other factors like sentiment, positive sentiment, hope around the vaccine. Where should the rand be? And that number is sitting currently close to 1850. So it just shows you that the rand is currently supported by other market factors, which is not part of the fundamental basket. So if we continue down this road that we just discussed in terms of the fiscal cliff, the downside pain for the rand is probably much more compared to a previous cycle where we didn't have all these global factors playing out. So we think at this level that you're seeing currently 15-something, it depends what you do, but for investors, this is not a bad level to actually buy dollars and think about an offshore portfolio, because our view is that the rand longer term will depreciate, it will slip, and will probably revert back to whether that level is 18, 1850 or 19, it doesn't really matter. It just means that there's a lot of downside from the current 15 odd that we are seeing. So use this opportunity to buy dollars, invest it offshore, and then in time you will benefit from a weaker currency.
Martin, thank you for your thoughts. Thank you for allowing us to pick your brain.
Thank you very much. Always good talking.
Excellent. Let's see how 2021 then pans out for the rand and for South Africa. Martin Ackerman is Chief Economist at Citadel, and as I said earlier, he's also an advisory partner at Citadel, talking about our markets and how that will pan out for the rest of the year. Before I go, I must quickly update you, of course, on that said rand. You saw 1547. On the all share index, we are up almost about 2/3%, 0.6%. That is the number that I'm looking at the moment. And in terms of who is driving that, I can tell you Naspers Process Axis active today. Naspers up 4.3%, Process up 3.6% as well. And on the other side, Cartrack, after jumping on that report that it is looking at moving its listing to the Nasdaq, is down 8.8% today. Telkom also under pressure, 3.4%. Thank you for watching our first program here on CNBC Africa in 2021. We are back here from Johannesburg at 5 p.m. Central African time. Thank you for joining us.
Time there was an incorrect assumption that it was the lower earning women who are heavily dependent on males for income who were the ones who were experiencing the most abuse and finding it very difficult, to leave their positions.
The question of gender-based violence should actually be talked about closely to sexual harassment as well, especially in the workplace. Because what you find is that women are afraid to speak, especially the ones who are in the leadership positions, because it makes them look weak.
We do talk about equity targets. We collect the statistics, but we actually don't do the work that is required to the corporate environment. Your procurement programs should be able to focus on women. It is just not enough for women to remain as SMMEs.
The country has done very well. I am testament to that. And the panel that is sitting here with me is also a testament to that.
Women in full inclusion in the workforce will add to the world's GDP $28 trillion a year.
Warm greetings to you from the west of the continent. I am Esther Awuni. Welcome to Power Lunch West Africa, our first show for the year from this region. Many thanks for joining us today. Well, we'll kickstart with an outlook on what the year 2021 holds for Nigeria's markets, trade, and indeed the economy. After that, we'll move on to a more pan-African conversation, talking about how will the Continental Trade Pact spur new entrepreneurs in Africa. Well, the CEO of the Tony Elumelu Foundation will join us for that conversation. We'd like you to be part of all our conversations as usual. Connect with us on Twitter at CNBC Africa. You can also send your thoughts and your tweets to my Twitter handle too. It's at Esther O. Awuni. Use the hashtag PLWA410. In the meantime, here are some of the stories we're tracking on the west of the continent. Now, Nigeria has reported 1,024 confirmed coronavirus cases on Sunday, reaffirming the significant increase in the number of cases in the country. The latest data by the Nigeria Center for Disease Control shows Nigeria now has over 20,000 active COVID-19 cases, with over 1,350 deaths across 36 states and the Federal Capital Territory. The NCDC data also indicates that a total of just over 1 million tests have been carried out as of the 10th of January this year. Outside our shores, Ghana is set to open sub-Saharan Africa's first liquefied and natural gas to power project through the Tema LNG terminal. The move aims to position Ghana as a hub for the cleaner and cheaper fuel in the region. Edmond Agiemandua, the project manager, disclosed that the company has received the floating regasification unit from Jiangnan, China, paving the way for the supply of 1.7 million tons of natural gas per year for power generation later this quarter. The company, backed by Helios Investment Partners and Air Africa Infrastructure Investment Manager, began building the $350 million project about 2 years ago. And finally, Brent crude oil prices fell by $1 per barrel, hit by renewed concerns about global fuel demand amid tough coronavirus lockdowns in Europe and new curbs on movements in China, where infections have jumped. Brent crude oil futures were down to 1.4% to $55.21 a barrel after falling to a session low of $54.99 a barrel earlier. Brent crude prices have risen in the previous 4 sessions. Those are top headlines from West Africa at this hour. On to our first conversation for the show. The year-to-date returns in Nigeria's equities markets for 2020 reached its highest yearly gain since 2008, when the NSE Osha index gained just over 50% to close the year. And meanwhile, trading under the African Continental Free Trade Agreement began on the 1st of January this year and has been touted as a key component of the continent's economic recovery. For an outlook on what the year 2021 holds for the markets, trade and the economy, Wale Olusi, Head of Investment Research at United Capital, and Omotola Abimbola, Macro and Fixed Income analyst at Chapel Hill, joined me to discuss this. Thank you, gentlemen, for joining us on the show today. It's a pleasure to have you, and welcome back, of course, to Power Lunch West Africa. Wale, let me start with you. 2020, as you know, was quite a rough year. However, for equity, for stock investors, it was quite an interesting ride. We saw that exodus from the fixed income market to the equities market, and the Nigerian stock index ended up being, I think, the best performing stock index in the world. Just share your thoughts. Let's just reflect for a few minutes now on trading at the equities markets and how events unfolded in 2020. Wale.
Thank you for having me, Esther. Good afternoon and Happy New Year to you. Okay, so I think, just like you said, 2020 was actually a very, very interesting year for the Nigerian market. The year started out, you know, as the best performer in January of 2020, actually, after, you know, a, you know, breakdown of, you know, agreement between the US and Iran led to a spike in oil prices, if you remember. But with the outbreak of the coronavirus, from February to, you know, March, the market actually tanked in between the end of March and early February. The market got to the record low of about 18 to 20,000 points, you know, around that period. But don't forget, prior to then, the central bank has already indicated its intention to, you know, implement some heterodox monetary policy, which has removed a number of non-bank financial institutions from the, you know, OMO market. And then that is already leading to a reduction in interest rates, or what you call yield. So what we saw between May and eventually in September was a situation whereby the yield on fixed income instruments actually crashed. Stop rates at the Treasury bills primary market auction crashed to around 0.01%. And the central bank cut the MPR, the benchmark monetary interest rate, by 200 basis points in the course of the year. What we saw was a mass shift, a mass exodus of investment from more or less risk-free instruments to riskier assets. And then the market surged as at November, at the peak of, you know, the bullish sentiment for stock. The you know, the circuit breaker of the NSE All-Share Index was triggered in November, when the market gained more than 5% in a single day. And then what we saw after then was sustained uptrend on the back of corporate action from the likes of Dangote Cement, which indicated that he wants to do a share buyback. And of course, interest in the likes of Airtel Africa, who, from what we hear, a number of investors are using as, you know, a medium for repatriation of capital, as well as MTN. Don't forget, before around, Boa Cement listed earlier in the year to add, you know, over ₦1 trillion to the market capitalization. I think, you know, if you put all of that together, that was what led to that record performance in the Nigerian stock market last year.
Omotolai, thank you very much, Wale. Omotolai, if I could just quickly come to you. We're trying to manage our time here, but just very briefly, talk to us about that one key highlight for you, be it at the equities markets, the fixed income market, or even the broader economy.
Thank you very much for having me, Hester. So speaking to the events that occurred in the financial markets last year, so as you rightly, you know, pointed out at the start of the conversation, last year was a very challenging one for the economy, for households, for businesses, due to the COVID-19 pandemic, you know, that led to restrictions of movements and also on businesses as well. But despite that, we saw a very strong performance in risk assets, particularly Naira risk assets, mainly because of the extraordinary dovish monetary policy of the Central Bank of Nigeria, and also its very dovish balance sheet policy. So a combination of those two factors, you know, led to a very strong performance of Naira risk assets. So Wale spoke earlier about the performance of the equity market, which returned 50%, and which was essentially the best performance of the index in more than a decade. But we actually saw a similar performance in the fixed income as well. So the S&P FMDQ bond index, which is an aggregate index that tracks the Nigerian sovereign bond market, it's returned a record 40% in 2020. And we saw long duration significantly outperforming, with the 30-year Naira bond returning more than 60%, and probably one of the best, performance, in the history of Naira risk assets. And but towards the end of the year, I think we began seeing a bit of, uptick in the yield environment, possibly because, market participants, have now more or less realized that, Naira yields are now looking highly overvalued. And most market participants are now more or less looking forward to the central bank to begin to tighten monetary policy in 2021, once the economy, goes back to growth once again.
Omotola, let's quickly move over to the outlook for this year. Let's start with Q1 and the equities markets now. The market started off a bit, mixed, but we did see some strong bargain hunting in the oil and gas sector. We saw bargain hunting in insurance and banking. But I want us to talk about the oil and gas index. It's up 13.1% so far. We've seen the likes of Seplat, Dover, Total rally. And I know this is not unconnected to the rally we're seeing in oil prices at the international market. But let me not preempt you. Speak to us on your outlook for the equities markets and what sector you think will continue to be on investors' radar.
Thank you very much, Esther. So for equities in 2021, we are mildly bullish on equities. We think that the return to growth in the economy, which should probably set in by Q2 2021, we think that's going to lead to an expansion in earnings per share and revenue of NSE-listed companies. So that's a positive catalyst for the market. And although we are also expecting the interest rate environment to be much more higher than what we had in 2020, our broad view, and perhaps also represent the consensus view, is that we're not going to have Naira yields, being at the level that is where, prior to 2019. So against that backdrop, the combination of below trend interest rate environment will be a positive catalyst for valuation multiples. And then on the other hand, we're also having a return to growth that could possibly set in by Q2 2021. There will also be a catalyst, for earnings per share for NSE-listed companies. So our outlook is that we're going to see a mild bullish performance for NSE-listed stocks in 2021. And speaking specifically for the oil and gas sector, 2021 is supposed to be a recovery year for the oil and gas sector, despite the fact that, the global economy is still dealing with the pandemic, which has led to, newer restrictions on movement of goods and services. But despite that, market is taking comfort from the fact that the OPEC Plus group, they're being very, very cautious regarding their oil production outlook. We saw the OPEC Plus meeting last week, and we saw the cartel, more or less extending their current production cut agreements for another month. And then Saudi Arabia even took a step further in actually imposing an additional voluntary 1 million barrels per day production cut. So the combination of that, we think will also be supportive for oil price in 2021. And our view is that they're going to see oil prices more or less averaging between $50 to $55 per barrel in 2021. And that should be a positive catalyst for Nigeria's oil and gas sector.
Okay, well, let's quickly talk about the fixed income and FX market. What is your outlook for the fixed income market? We saw that significant drop last year, but we did see yields inching up just before the year closed. But what is your outlook for the yield curve and perhaps even government borrowing appetite in Q1?
Okay, thanks once again, Esther. Well, for us, we think in 2021, the yield environment should, inch, up slightly compared to the levels we saw in 2020. As Tola just mentioned now, after, a particular Treasury bills auction, I saw a spike in 364-day bill to about 3.2% in December 2020. What we have started seeing is a situation whereby dealers started, bidding, very, very high. And then a lot of sellers are now in the bond market. A lot of people want to exit their positions before a potential reversal in rates becomes a bit more clear. What we think is that there's a likelihood for the yield environment to stay relatively low in Q1 of 2021, but as monetary policy becomes clearer, depending on what the MPC will do in January as well as in March, we think from Q2 upward, where, by the way, a lot of OMO maturities, will not be in the system at all, because between April of 2020 and June, there were not so many OMO auctions at all. So depending on what the central bank now want to do with the special bills that they started, issuing or selling as the last year to banks, that will also give a lot of indication. But our expectation is that the yield environment should start inching higher from Q2 of 2021. Again, the levels of inflation is actually very, very disturbing to monetary policy. We think they want to see how they want to rein in inflation. And of course, also see how they can make the FX market a bit more active again. So on the whole, we expect monetary tightening later in the year. Hence, you will start seeing the yield environment inch higher. But I need to also say that we do not expect rates to go to the levels they were in 2019 anytime soon. So it will inch up, but maybe not as high as it used to be. For FX, we think the big elephant in the room is when the central bank really want to start significant intervention in the I&E window. And then what we continue to look at is this, the level of the external reserve. We think that if the external reserve gets to a comfortable level for the CBN, maybe 38 billion or something higher than where it is now, maybe they can now start selling a bit more aggressively at the I&E window. What we expect to happen, if they start that intervention, is a situation whereby increased liquidity in the hand of BDCs, as well as the remittance policies that they made last year, will force the parallel market rate to crash and probably converge at the center alongside the I&E window rate, just like we had before the coronavirus broke out. So with improvement in oil prices,
Monday, I'm going to have
maybe
to,
that convergence.
Just hold that thought for us. I just want to quickly bring in Omotola to quickly just make one note on the economy. We have just 60 seconds left. Omotola, your outlook for the economy. We have the 2021 budget. We have made significant changes to our tax laws. I'm talking about the Finance Bill 2020. What is your outlook?
So last year was very challenging, no doubt, and we think 2021 will remain very challenging. Particularly because we haven't been able to get a handle on the control of the COVID-19 outbreak. Nigeria is currently witnessing the second wave, which is much more stronger and possibly even more fatal than the first wave. So that remains the major downside risk to the economy. But broadly speaking, we think the environment should be a lot more better than 2020. And I would say due to a couple of factors. The first one is that we're actually expecting oil prices to be much more stronger in 2021 than 2020. In 2020, oil prices averaged about $42 per barrel, and we had oil production in the later parts of the year going as low as 1.7 million barrels per day. In 2021, we think we should see much more higher oil prices and oil production, and both should lead to higher fiscal spending by the government and also improvement in FX liquidity in the economy. Secondly, we're also expecting more fiscal spending. We saw the 2021 budget recently passed recently signed by President Buhari, where we saw the government more or less getting towards spending 13.5 trillion, or about 7% of GDP in 2021, from the guidance of about 10 trillion naira in 2020. Also, we are seeing an expansion in deficit spending from what we estimated to be around 6 trillion naira in 2020 to about 7 trillion naira, or 3.7% of GDP in 2021. So we think, that improvement in fiscal spending and also deficit spending particularly should also have a positive knock-on impact, on GDP in 2021.
Omotola, I must thank you for your time. Thank you. We're going to have to leave it there. Thank you for your time. I've been speaking to Wale Olusi, Head of Investment Research at United Capital, and Omotola Bimbola, Macro and Fixed Income Analyst at Chapel Hill, sharing their forecast for the market and, of course, the broader economy here in Nigeria. We'll take a short break and we'll be right back with the rest of the show. To join us again.
Thinking of banking in Africa? Then think Zenith, adjudged the largest bank in Nigeria by Tier 1 Capital for 3 consecutive years, named Best Bank in Corporate Governance and the most customer-focused bank in Nigeria. Zenith is certified on 3 key ISO standards, a success built on dedication to people, technology, service and commitment to internationally accepted principles and standards. Zenith Bank, in your best interest.
Welcome back to Power Lunch West Africa. Now, the World Bank says the highest rates of entrepreneurship in the world are in sub-Saharan Africa. Now, the Tolu Elumelu Foundation has been tapping into the potential of Africa's young entrepreneurs for over a decade. And the CEO, Ifeyinwa Ugochukwu, joins me now to discuss how the pandemic and the Continental Trade Pact can spur new entrepreneurs on the continent. Ifeyinwa, thank you for joining us today. Pleasure having you. 2020 was quite a rough year, I mean, for everybody, most especially, I suppose, on some level for entrepreneurs here on the African continent and indeed Nigeria. But we did see some bright spots. The WHO has said that, I mean, we did see some African health techs, come on stream, and some of the ideas, the innovations were actually adopted. So we did see some of those bright spots. But for you, what are your thoughts on 2020, the innovations, the new ideas that we saw emerging on the continent?
I think the 2020 COVID pandemic really did highlight the critical importance of entrepreneurship, especially in Africa. Quite early in the pandemic and the lockdown, we found severe shortages of PPP, protective wear, as well as masks. And we saw how entrepreneurs swung into action. We saw fashion designers become large-scale manufacturers of masks and other protective equipment. And so that for us is a testament to the fact that African entrepreneurs are innovative, they're creative, and all they need is the enabling environment as well as the training and capital to ensure that Africa's economic development is on an upward trajectory and that the COVID-19 pandemic does not disrupt this trajectory. And that is what we're trying to ensure in the Tolu Elumelu Foundation by opening our portal January 1st, 2021, the very same day that the Africa Continental Free Trade Agreement went live, and it's all hands on deck. So what we're saying to all development organizations and African governments, as well as foreign governments, is that now is the time to scale the work we've been doing for the last 10 years, empowering African entrepreneurs. They need training, they need capital in their hands, and they need an enabling environment.
But are there specific ways that the Tolu Elumelu Foundation is adopting this new round of seed capital for entrepreneurs with the pandemic and how it's changed the way we do business?
Definitely. We all know that digital transformation is everyone's reality. We will not be able to conduct business without technology. And so a number of years prior, we have already begun a digital transformation at the Tolu Elumelu Foundation. And that is why this year we're able to automate our selection process. Before now, our selection process involved manual reviews of the application forms in conjunction with our partners like Deloitte or Accenture. But now we have been able to put in place an algorithm in our system that scores the entrepreneurs immediately they do the application form. And this means that once you're done with the application form, you will know whether you've been selected to the program. You're either selected for training as a beginner, as an intermediate, or as an advanced entrepreneur. And what we're doing also is to ensure that more entrepreneurs than will be funded are trained. Because whilst we have the limitations of funding based on our commitment to fund 1,000 every year and the partners that come on board, we know that the training has proved critical to a lot of entrepreneurs and their growth. And that is why we are this year going to train upwards of 10 to 20,000 entrepreneurs on the Tolu Elumelu Foundation Entrepreneurship Program. The funding will then go to the top performing entrepreneurs who pass through to the pitching competition and are selected as the top performers. This year, we will be funding well over 3,000 entrepreneurs, 1,000 from the 2020 applicants, and another 2,400 minimum from the 2021 applicants. As you know, the Tolu Elumelu Foundation Entrepreneurship Program was launched in 2015, a $100 million commitment by our founder from his family wealth to identify, train, mentor, and fund 10,000 African entrepreneurs over 10 years. Every year since then, our program has selected 1,000 Africans across all 54 African countries, giving them a world-class business training, mentoring, and a $5,000 non-returnable seed capital, which entrepreneurs have found invaluable to getting their foot in the door and starting the entrepreneurial journey. We believe that training and funding are two sides of the same coin. You can't and shouldn't have one without the other.
Now, another opportunity has opened up to these entrepreneurs. I'm talking about the Africa Continental Free Trade Area, which took effect from the 1st of January this year. How can, I know that many of these businesses are small scale, maybe a staff strength of 1 or 2, many of them still finding their feet, but what pathway can be created for these businesses to at least prepare them to take advantage of this larger market that has suddenly opened up to them, maybe tapping into regional supply chains, etc. What kind of support can be provided to them?
So let me correct a conception. You said some of them have 1 or 2 employees. Actually, our studies and our impact assessment have shown that the small and medium enterprises we empower have an average, a minimum of 5 employees, but many of them are giving employment to well over 300 to 500 people in the job market across Africa. So, you know, our SMEs, they are our powerhouse. They are the job creators in Africa and indeed the rest of the world. And that is why they're so important. And with the Africa Continental Free Trade Agreement, this is a unique opportunity, a once-in-a-lifetime opportunity for us to finally take away the fragmented markets that have plagued Africans for generations. Our entrepreneurs have often complained that it's so difficult to get goods and services across the borders. You know, you often find it's easier to fly to the United States than to Zambia. You know, you have to go through 5 planes in 10 different countries within your own continent. And so what we need to ensure that the entrepreneurs can leverage the gains and the opportunities of the Africa Continental Free Trade Agreement is that enabling environment, is the infrastructure, is, you know, breaking down the currency barriers. So there's a lot to be done. The will is there. The first step is to ratify this Africa Continental Free Trade Agreement, but the next step is that governments must ensure that working with private sector, the infrastructure, the enabling environment, the technology is there for the entrepreneurs to really leverage this opportunity. And so at the foundation, the first thing that we're doing is to educate our entrepreneurs, to sensitize them as to the opportunities that have immediately opened up to them with the global markets. You have access to these global markets through technology by leveraging social media and the internet. So that's the first step. Tell them about it, sensitize them, let them begin to innovate how to leverage it before the infrastructure is put in place.
Ifeanyiwa, I must thank you for your time. Thank you very much indeed for speaking to us, and of course, all the best with that new round of seed funding for entrepreneurs on the continent and beyond. I've been speaking to Ifeanyiwa Ugochukwu. She's the CEO of the Tony Elumelu Foundation. Well, that's our show for today. Thank you so much for being a part of it. Remember to connect with us on Twitter at CNBC Africa. For myself and the team, it's bye for now.
Thinking of banking in Africa? Then think Zenith, adjudged the largest bank in Nigeria by Tier 1 Capital for 3 consecutive years, named Best Bank in Corporate Governance and the most customer-focused bank in Nigeria. Zenith is certified on 3 key ISO standards, a success built on dedication to people, technology, service and commitment to internationally accepted principles and standards. Zenith Bank, in your best interest.
Hello, my name is Kirtana. I'm Engineering School Officer here at Curtin University, Dubai. Studying engineering in Curtin University is like a dream come true.
We have our own standalone state-of-the-art engineering pavilion nested in the heart of Dubai's Silicon Oasis.
And it's just a few minutes away from the main campus in Dubai Academic City.
Our curriculum is based on practical training. A project we recently had to complete was a solar station. We created a skill model with photovoltaic solar panels, wood, inverter, battery, and wires.
To bridge the gap between the real world and the classroom, our engineering curriculum also includes a mandatory 480 hours of exposure to professional engineering practice, which focuses on industry-oriented training.
These visits and lectures serve as a platform for acquainting us in the industry.
very long time, there was an incorrect assumption that it was the lower earning women who are heavily dependent on males for income, who were the ones who were experiencing the most abuse and finding it very difficult, to leave their positions.
The question of gender-based violence should actually be talked about closely to sexual harassment as well, especially in the workplace. Because what you find is that women are afraid to speak, especially the ones who are in the leadership positions, because it makes them look weak.
We do talk about equity targets. We collect the statistics, but we actually don't do the work that is required to ensure that we empower other women. We create an environment for women to be able to thrive within the corporate environment.
Your procurement programs should be able to focus on women. It is just not enough for women to remain as SMMEs.
The country has done very well. I am testament to that. And the panel that is sitting here with me is also a testament to that.
Women in full inclusion in the workforce will add to the world's GDP $28 trillion a year.
Closing Bell West Africa is proudly brought to you by Boer Group, unlocking opportunities.
You're watching Closing Bell West Africa, where we're coming to you live from Nigeria's commercial capital, Lagos, and I'll be taking you through some of the top stories that impact the financial markets across West Africa today. Coming up on the show, we're seeing the equities market in Nigeria was currently trading marginally up, but the market was down 0.37% last week after a year-to-date gain of 50% from the equities market in Nigeria. We're seeing the oil and gas index taking the pole position. Coming up on the show in company news, we'll be speaking to the CEO of CNI Leasing, and he'll speak to us on the recent acquisition of over 50% of the company's shares by Peace Mass Transit. We'll also be looking at the macroeconomy and find out what's the outlook for Nigeria going forward. And still in Ghana as well, we'll look at Ghana's path to recovery after the second term of the recent president. To be part of the conversations, let us know what you think. The hashtag to use is at CNBC Africa. You can also hit me up on my handle. That's at Kenneth Igbomo. But first, let's take a quick look at some major news making rounds across West Africa today. Starting from Nigeria, where the Asset Management Corporation of Nigeria says its current exposure stood at 4.4 trillion naira. AMCON has called on all agencies of the federal government and stakeholders to join its debt recovery drive to guide against the opportunity cost of not recovering its huge total current exposure. In a statement, AMCON says the sum owed is bigger than Nigeria's 2021 capital expenditure budget. On to Ghana now. Ghana is set to open Sub-Saharan Africa's first liquefied natural gas to power project through the Tema LNG terminal. The move aims to position Ghana as a hub for the cleaner and cheaper fuel in the region. Edmond Agiemandua, the project manager, disclosed that the company has received the floating regasification unit from Jiangyan, China, paving the way for the supply of 1.7 million tons of natural gas per year for power generation later this quarter. The company, also backed by Helios Investment Partners and Africa Infrastructure Investment Managers, began building the $350 million project about 2 years ago. In commodities now, Brent crude oil prices fell as much as $1 per barrel, hit by renewed concerns about global fuel demand amid tough coronavirus lockdowns around the world, as well as a stronger U.S. dollar. Brent is down 57 cents to $55.42 a barrel after falling over $1 in a session low of $54.99 earlier. Reuters tally notes that global coronavirus cases have surpassed 90 million. And these are some of the top stories making rounds at this hour. Now, Peace Mass Transit has acquired about 55.8% of the issued shares of CNI Leasing through the purchase of units of the Neoma Africa Fund's convertible loan stock. And CNI Leasing says the transaction will strengthen the capital base of the company. And the CEO, Andrew Otike Odibi, tells us how. Thank you so much for your time today, Andrew. And let's get into this transaction and get some understanding as to how this is going to impact your capital base and structure.
Okay, we've been carrying the loan stock on our books for about 10 years, and so investors have not been very clear on how that plays. Is it equity or is it loan? So we've had some issues with some potential investors about really identifying how to place that investment. With the loan stock being purchased by Peace Mass Transit and converted to equity, then that's clearly equity. And so whoever is coming in knows how much of the business is going to invest in and what the impact of the investment will be in the business. So I think this move to buy the loan stock of Actis and convert is very good for the business and for potential investors.
All right, but reading through your note on the NSE, you note that the need for redemption of the note has been eliminated. I'd like you to clarify on this point.
Okay, the investment was had two conditions, either to redeem or to convert. So at the point of expiration of the initial note about 5 years ago, it was clear that the note could not be redeemed. So we couldn't have paid $10 million at that point. And so the investors went for the conversion option. Investors here, I mean Actis, went for the conversion option. But part of the delay that we experienced was due to the changes that took place in Abraj, who were the original holders of the fund. So that affected the decision to convert. And when Actis finally took over the management of the funds, then we started the discussion again. And so that's why, otherwise, this conversation would have been had. We'll have had it about 2 years ago. Yeah. So that conversion from Abraj to Actis delayed the discussion to convert the loan stock to shares, to equity.
All right, but if Peace Mass Transit converts this loan to equity, they definitely will become the single largest shareholders in the company. And how does this sit with shareholders?
Well, what happened really, Peace Mass Transit is not a new shareholder in the business. In fact, Peace Mass Transit has been a director in the business. And so at the point of wanting to sell the loan stock, Actis approached the current directors. So it's not a new conversation, really. It's something that's been on the table for a while. And so, speaking at the director level, it's a very welcome development because it's more like one of us is buying over the loan stock from Actis. And the impact onto the minority shareholders, we see as positive because you will see, we expect to see a lot more value being passed down to the minority shareholders in terms of business growth. Now the business is open for additional equity investment, and so that will translate into value generation for the business.
All right, let's get into CNI Leasing as a company. And 2020 was definitely a year many companies will want to forget in a hurry. But for you, though, how are you strategizing going into this year?
Well, 2020 definitely was, I would say, a learning year for us. What that has done is that it has helped us to prepare for 2021 and beyond. We've looked at our business model and we've come up with a strategy to grow more on the non-asset related income. And so we started doing a bit of that towards Q4 last year. And that's the drive we're going to continue with into 2021 and 2022. It doesn't remove the importance of the asset related income, but it just shows us that we're less volatile to shocks with the non-asset related income. So we're doing a lot of work towards generating services around the non-asset related income. So I expect that the impact of that will kick in sometime around Q2 2021 and beyond.
All right, but looking at the performance of the equities market last year, up over 15%, and as a company playing in that space, I'd like to get what you can expect from the performance of the market going into this year.
Well, this year, I don't expect that the market will just wake up suddenly. A lot of investors are going to play the wait-and-see game and see how things pan out for, at least for Q1 and then maybe Q2. So I expect some recovery to come in towards the end of Q2, and then most of it will come in Q3 and Q4. That's where more interest and confidence will come back fully into the market.
All right, then thank you so much for your time. I've been speaking to Andrew Otike-Odibi, is the CEO of CNI Leasing. We'll take a quick break, and when we return, we'll bring you more on Closing Bell West Africa.
Closing Bell West Africa is proudly brought to you by Boa Group, unlocking opportunities.
Thinking of banking in Africa? Then think Zenith, adjudged the largest bank in Nigeria by Tier 1 Capital for 3 consecutive years, named Best Bank in Corporate Governance and the most customer-focused bank in Nigeria. Zenith is certified on 3 key ISO standards, a success built on dedication to people, technology, service and commitment to internationally accepted principles and standards. Zenith Bank, in your best interest.
For a very long time, there was an incorrect assumption that it was the lower earning women who are heavily dependent on males for income, who were the ones who were experiencing the most abuse and finding it very difficult, to leave their positions.
The question of gender-based violence should actually be talked about closely to sexual harassment as well, especially in the workplace. Because what you find is that women are afraid to speak, especially the ones who are in the leadership positions, because it makes them look weak.
We do talk about equity targets. We collect the statistics, but we actually don't do the work that is required to ensure that we empower other women. We create an environment for women to be able to thrive within the corporate environment.
Your procurement programs should be able to focus on women. It is just not enough for women to remain as SMMEs.
The country has done very well. I am testament to that. And the panel that is sitting here with me is also a testament to that.
Women in full inclusion in the workforce will add to the world's GDP $28 trillion a year.
You might think you've seen a black hole before, but until now, you haven't. You've seen artists' conceptions, animations, simulations. Now, after almost a decade of work, scientists from the Event Horizon Telescope project have produced the first ever actual image of a gargantuan black hole. Why did it take so long? Black holes are extremely hard to see. Light can't escape.
Closing Bell West Africa is proudly brought to you by Boer Group, unlocking opportunities.
Welcome back to Closing Bell West Africa. Now, Vertiva Research expects Nigeria's economy to rebound by 1.48% this year. They also note that the need to revitalize the economic growth will be the focus of the 2021 expenditure plan. And Mosokwe Arubai, the chief economist at Vertiva, joins me now as we discuss Nigeria's path to recovery. Thank you so much for your time today, Mosokwe. And looking at the path to recovery, I'd like to start off first by looking at the budget, and I'd like to get what your take is on what the drivers could be for this projection you are making on the economy.
Okay, thank you very much, Kenneth. Thanks for having me. As is stated in our report, I see a return to growth in 2021. My expectation is 1.48% on the back of 2020's favorable base and interventions by policy makers, though recovery may not be broad-based. In the agricultural sector, we believe it will continue to be constrained by insecurity and adverse weather conditions such as flood. The manufacturing sector may also be constrained by the usual suspects, weaker currencies, power challenges that translate to higher operational costs, depressed consumer wallets that translate to lower demand for manufacturing products, and so on. Recovering the mining sector may also be constrained by policy deficiency. We're aware that the PIGB is still pending, and this could limit growth stimulating investments in the sector, as well as OPEC production limits. On the flip side, however, we believe progress with medical solutions to the COVID pandemic bodes well for tourism, that is leisure and hospitality. We also expect that transport and entertainment sectors could also rebound strongly as tourism restarts. But sectors like the ICT, health, and logistics are projected to also have a good year. So with the large sectors that contribute the most to growth, having constraints to their output this year, and the much smaller sectors seeing strong rebound and positive developments with the medical solution to COVID, we expect a positive but sluggish growth of 1.48% for 2021.
All right, now policy is going to play a major role in this recovery, and looking at the fiscal and monetary policy positioning, how do you think this is going to play out? What are your expectations coming into the year?
Okay, for monetary policy, I believe it's going to be largely accommodative because of we still have external sector risks. Oil prices are not recovering as strongly. External demand, there's still uncertainty around it. So because of risks to the external sector, and there's also the need to stimulate growth, we believe the Monetary Policy Committee would be a lot more accommodative through the year. However, a worse than expected growth outcome going into 2021 may trigger a more bearish position from the Monetary Policy Committee. Expectation is that we could still see a somewhat slightly negative growth in Q1 due to base effects from Q1 2020, but progressing into the rest of the year, if the COVID, if the second wave of the COVID intensifies and it affects domestic output, then we could see a more bearish Monetary Policy Committee. However, from the fiscal side, we've seen clearly that the government is still pursuing an expansionary fiscal policy with the passing into the signing of the 13 13 trillion naira budget for 2021, which is 36% higher than what we had for 2020. The rationale behind this is to have as much money out as possible to stimulate domestic demand, but there's still concerns around sustainability of the deficit that is supposed to be financed in the budget. It's projected at 5.2 trillion or 3.6% of the GDP. We could see this worsen. We could see the deficit worsen beyond what is being projected, especially with uncertainty around the COVID pandemic. There's also uncertainty about distribution of the vaccine. Even if there's a vaccine and they roll out as quickly as H120, there are logistics constraints that are also being considered. So this could affect the recovery in external demand and by extension weigh on the earning capacity of the government and ability to finance the 13 trillion budget. So we could see a situation whereby the fiscal position would deteriorate more than projected, and that will be adding to our existing not so pleasant debt profile.
All right, now looking at trade policy, we saw the AfCFTA come into effect on the 1st of January, and I'd like to understand how Nigeria can benefit better from this trade pact going forward.
Okay, in my opinion, the AfCFTA presents an opportunity for Nigeria to deepen its industrialization by adding value to its exports in order to increase our market options and reduce reliance on Asia and Europe. We saw what happened with the onset of the COVID-19 pandemic. Unfortunately, the government wants a comparative advantage in agriculture so badly, probably because most African countries are net importers of food, implying that there's an existing market for food export within the region. But they also, we all know that there are structural impediments to productivity in the agriculture sector that make Nigeria's agriculture sector less competitive. So what is likely to happen with the coming into force of the AfCFTA in the medium to long term is specific sector players will be able to identify opportunities within the scope of the agreement that they can take advantage of. Everything may not have been completely figured out now, but while implementing the agreement, I believe sector players will be able to identify opportunities in
All right, Moshope, thank you so much for your time. Interesting times we're seeing for Nigeria here, and we'll watch and see how things play out. Moshope Arubayi is an economist at Vertiva. Now, Tony Elumelu. All right, we'll take a quick look at other West African bourses and see how other markets are set to close today. Now, the World Bank says the highest rates of entrepreneurship in the world are in sub-Saharan Africa. The Tony Elumelu Foundation has been tapping into the potential of Africa's young entrepreneurs for over a decade, and the CEO, Ifeanyiwa Ogochukwu, joined CNBC Esther Awoni earlier to discuss how the pandemic and the Continental Free Trade Pact can spawn new entrepreneurs in Africa.
The 2020 COVID pandemic really did highlight the critical importance of entrepreneurship, especially in Africa. Quite early in the pandemic and the lockdown, we found severe shortages of PPP, protective wear, as well as masks, and we saw how entrepreneurs swung into action. We saw fashion designers become large-scale manufacturers of masks and other protective equipment. And so that for us is a testament to the fact that African entrepreneurs are innovative, they're creative, and all they need is the enabling environment as well as the training and capital to ensure that Africa's economic development is on an upward trajectory and that the COVID-19 pandemic does not disrupt this trajectory. And that is what we're trying to ensure in the Tony Elumelu Foundation by opening our portal January 1st, 2021, the very same day that the Africa Continental Free Trade Agreement went live, and it's all hands on deck. So what we're saying to all development organizations and African governments, as well as foreign governments, is that now is the time to scale the work we've been doing for the last 10 years, empowering African entrepreneurs. They need training, they need capital in their hands, and they need an enabling environment.
But are there specific ways that the Tony Elumelu Foundation is adopting this new round of seed capital for entrepreneurs with the pandemic and how it's changed the way we do business?
Definitely. We all know that digital transformation is everyone's reality. We will not be able to conduct business without technology. And so a number of years prior, we have already begun a digital transformation at the Tony Elumelu Foundation. And that is why this year we're able to automate our selection process. Before now, our selection process involved manual reviews of the application forms in conjunction with our partners like Deloitte or Accenture. But now we have been able to put in place an algorithm in our system that scores the entrepreneurs immediately they do the application form. And this means that once you're done with the application form, you will know whether you've been selected to the program. You're either selected for training as a beginner, as an intermediate, or as an advanced entrepreneur. And what we're doing also is to ensure that more entrepreneurs than will be funded are trained. Because whilst we have the limitations of funding based on our commitment to fund 1,000 every year and the partners that come on board, we know that the training has proved critical to a lot of entrepreneurs and their growth. And that is why we are this year going to train upwards of 10 to 20,000 entrepreneurs on the Tony Elumelu Foundation Entrepreneurship Program. The funding will then go to the top performing entrepreneurs who pass through to the pitching competition and are selected as the top performers. This year, we will be funding well over 3,000 entrepreneurs, 1,000 from the 2020 applicants, and another 2,400 minimum from the 2021 applicants. As you know, the Tony Elumelu Foundation Entrepreneurship Program was launched in 2015, a $100 million commitment by our founder from his family wealth to identify, train, mentor, and fund 10,000 African entrepreneurs over 10 years. Every year since then, our program has selected 1,000 Africans across all 54 African countries, giving them a world-class business training, mentoring, and a $5,000 non-returnable seed capital, which entrepreneurs have found invaluable to getting their foot in the door and starting the entrepreneurial journey. We believe that training and funding are two sides of the same coin. You can't and shouldn't have one without the other.
Now, another opportunity has opened up to these entrepreneurs. I'm talking about the Africa Continental Free Trade Area, which took effect from the 1st of January this year. I know that many of these businesses are small scale, maybe a staff strength of 1 or 2, many of them still finding their feet. But what pathway can be created for these businesses to at least prepare them to take advantage of this larger market that has suddenly opened up to them, maybe tapping into regional supply chains, etc.? What kind of support can be provided to them?
Actually, our studies and our impact assessment have shown that the small and medium enterprises we empower have an average, a minimum of 5 employees, but many of them are giving employment to well over 300 to 500 people in the job market across Africa. So, our SMEs, they are our powerhouse. They are the job creators in Africa and indeed the rest of the world. And that is why they're so important. And with the Africa Continental Free Trade Agreement, this is a unique opportunity, a once-in-a-lifetime opportunity for us to finally take away the fragmented markets that have plagued Africans for generations. Our entrepreneurs have often complained that it's so difficult to get goods and services across the borders. you often find it's easier to fly to the United States than to Zambia. You have to go through 5 planes in 10 different countries within your own continent. And so what we need to ensure that the entrepreneurs can leverage the gains and the opportunities of the Africa Continental Free Trade Agreement is that enabling environment, is the infrastructure, is breaking down the currency barriers. So there's a lot to be done. The will is there. The first step is to ratify this Africa Continental Free Trade Agreement, but the next step is that governments must ensure that working with private sector, the infrastructure, the enabling environment, the technology is there for the entrepreneurs to really leverage this opportunity. And so at the foundation, the first thing that we're doing is to educate our entrepreneurs, to sensitize them as to the opportunity that have immediately opened up to them with the global markets. You have access to these global markets through technology by leveraging social media and the internet. So that's the first step. Tell them about it, sensitize them, let them begin to innovate how to leverage it before the infrastructure is put in place.
And that was Ifeanyi Ogochukwu there, the CEO of the Tony Elumelu Foundation. And that's a wrap on Closing Bell West Africa for today. And thank you so much for being a part of the show. From me and the team, it's bye for now.
Closing Bell West Africa is proudly brought to you by Boa Group, unlocking opportunities.
For a very long time, there was an incorrect assumption that it was the lower earning women who are heavily dependent on males for income who were the ones who were experiencing the most abuse and finding it very difficult, to leave their positions.
The question of gender-based violence should actually be talked about closely to sexual harassment as well, especially in the workplace. Because what you find is that women are afraid to speak, especially the ones who are in the leadership positions, because it makes them look weak.
We do talk about equity targets. We collect the statistics, but we actually don't do the work that is required to ensure that we empower other women. We create an environment for women to be able to thrive within the corporate environment.
Your procurement programs should be able to focus on women. It is just not enough for women to remain as SMMEs.
The country has done very well. I am testament to that. And the panel that is sitting here with me is also a testament to that.
Women in full inclusion in the workforce will add to the world's GDP $28 trillion a year.
It's Monday, the 11th of January, and you're watching Closing Bell East Africa. I'm Arnold Kwizera. Coming up, a look at Uganda's elections. We speak to the country's government spokesperson, and we also take a look at what the Biden presidency does for African economies. But first, your top stories. Now, Kenya has owed to IMF pressure to include $31 billion parastatal and county loans as part of the country's national debt. Now, the National Treasury said this will be done gradually, beginning with foreign currency debts by parastatals before including loans from private-public partnerships, pension, and county governments. Now, currently, the Treasury only recognizes. Finally, Kenyan telco Safaricom has halted its plans to roll out the 5G mobile internet service in Kenya, saying it is shifting focus on converting millions of 2G and 3G subscribers to 4G. Now, the company had hinted at plans to launch and roll out 5G at the end of last year, now in the major towns in the country, having already conducted trials. Now, however, Safaricom CEO Peter Ndegwa now says that the company has no plans to launch the network in the short term. those are the top stories. Now, quickly moving on, this week citizens in Uganda go to the polls in the presidential elections that pit the incumbent Yoweri Kaguta Museveni up against popular musician Robert Chagulanyi, also known as Bobby Wine. Now, in campaigns that have been marred by arrest of opposition politicians, we spoke to the Ugandan government spokesperson Ofono Opondo on expectations from the polls.
The campaign logistics, rather the polling logistics, ballot papers, and so on, have already reached all the 140 districts. Polling officials are in place. Candidates, we believe, have trained their agents and deployed them ready for the go on Thursday. From the Electoral Commission and the government side, all the logistics have been provided. We want to believe that the elections will go on smoothly, peacefully, and results be released in good time. We, of course, in elections and the campaigns, we expect tensions and anxiety, but so far, so good. There is no specific threat to this election, but just in case there is any, we are ready to deal with them.
Mr. Fonoponda, by we, what do you mean there? We've seen the elections, the way they've been covered across various social media platforms. We've seen the opposition candidates, the likes of FDC's Amriat, NUP's Robert Chagulanyi, they are being manhandled, being arrested, journalists arrested. We've also seen, a killing of a number of people and even disappearances of some people. Why is that happening, and is that ground for a free and fair election?
Well, first of all, in this election, we have 11 presidential candidates. The other 9 have had their campaigns generally very smooth because they have lived up to the expectation of the law, the regulations that they signed with the Electoral Commission to obey those rules, especially under COVID. Mr. Amriat and Mr. Chagulanyi, from the word go, even before nomination, they said they will be campaigning under defiance. As you may recall, Mr. Amriat is part of the FDC wing, which says they are defying, they don't believe in the current government. Actually, Mr. Amriat is a minister of internal affairs in an alternative government, which they call the people's government. So Mr. Amriat does not recognize the legitimacy of the current government in Uganda. So they have been defying. The consequence of which is that they have refused to obey the COVID SOPs. They have refused to obey the regulation by the Electoral Commission. They have refused to obey the orders of law enforcement officers, and the reason you have seen confrontation between them and police officers. You have seen Honorable Chagulanyi assaulting, slapping a police officer. I don't think this can happen in any other part of the world except Uganda. And so because they have chosen that one, that line, there has been a bit of fracas between them and law enforcement officers. You have also heard Mr. Chagulanyi saying they are training vote protectors, they are training rioters, and they are training rioters to march on State House. Should the results not go his way, or should he not be declared? I just want to give the international community and our Ugandan audience that the election will go on smoothly. The rightful winner will be declared. We have 5,000 parliamentary candidates running for approximately 498 seats. By and large, the parliamentary election has attracted the same amount of attention, I guess, because majority of the parliamentary candidates have been law-abiding, and the agents have been law-abiding too.
Yeah, but Mr. Fonpundo, that's factually incorrect in terms of we've seen the incumbent President Yoweri Museveni, also launching a few projects. He launched a TAP the other day. He launched a hospital as well. And we've seen people in those areas not respecting SOPs. We've seen them dancing in the streets. There are videos of that. But we've not seen the army, the military, the police handle his supporters the same way the other candidates have been handled. Even someone who many don't think is favorite in this race, someone like Katumba. we've also seen him running away from police.
Katumba has been more on a joyride, and so I think I personally have been paying much attention to him. For the record, candidate Yoweri Museveni, wherever he has been, he has made all the SOPs of COVID, the regulation of the Electoral Commission. He has campaigned on the restricted meetings of the leaders of his political party and sometimes flag bearers of his political party at the various levels of election. He has not gone beyond 200. Secondly, he has not been cited as a candidate in any crowd. He has not been cited waving, getting out of his car on the roof of his car and waving and talking to bystanders. Never. However, in an election, obviously, we expect the crowd, the supporters to be emotive. It is the responsibility of the leader to ensure that you educate your followers to obey the rules. President Museveni has not actively engaged, has not actively encouraged processions or crowds. Yes, you are right. There have been crowds in some of his gatherings, particularly when he's launching projects as the president of Uganda, and he has made that clear. And so we need to make a distinction between him as a candidate and him as the president of Uganda. Even when he has been launching projects, we have been seeing Mr. Museveni well dressed up in a mask, keeping social distance with the officials and the public. And so you cannot put Mr. Museveni and Amriat and Chagulanyi in the same basket, because those two have actively been encouraging their supporters or followers, and all the photographs have been in the midst of crowd. You have not seen Mr. Chagulanyi or Mr. Amriat once in a face mask or social distancing. You have not seen them.
So why hold
their
elections?
Their public utterance has been that they are on campaign of defiance. They have been saying so.
Mr. Ofunopondo, so why hold elections during the COVID-19 time? Because we've seen other countries in the continent, Ethiopia, as an example, not holding elections during this COVID period of time, citing, that transmission of this disease.
But we have also seen Central African Republic held elections, Tanzania held elections, Malawi held elections, Ghana held elections. Far away, the US has just held elections. We went into this election well knowing that there is COVID because we could not constitutionally postpone the election. The consequence of which, the reason why we did the standard operating procedure. We were hopeful that the leaders at all levels would obey the SOPs. Unfortunately, two presidential candidates have been intransigent, deliberately not respecting SOPs. We write laws. When we write laws, we expect everybody to follow those laws. That does not mean that 1 or 2, 3 people will not, either willfully or through negligence behavior, disobey the laws. In this particular case, these ones have been deliberately negligent, deliberately defiant. And therefore, that cannot prevent us from holding election. We should be able to restrain them. I do admit that in some of the cases, the police, law enforcement officers have been either arbitrary or high-handed. They ought to be firm, but in a humane way. Secondly, even where the police has been arbitrary, the rules demand that you challenge them either administratively through the command and control of the police, or you challenge them through the orders of courts. None of those candidates has ever run to court to challenge the orders or the directive or indeed the action of the police.
Mr. Ofunopondo, but the issue of violence during elections is not something new in Uganda. We saw it in 2016. We saw it in 2011, where the candidate, Dr. Kizza Besigye, was running then. He often was tear-gassed, picked up, and there were also, people that lost their lives. We've had similar incidents happening this year with one of Uganda's leading newspapers there, the Daily Monitor, putting numbers where over 50 people that have been killed during this campaign period. This is not something new.
Not new exactly, but also in all the elections we have had more than 2 presidential candidates. As a matter of fact, in the last 4 presidential elections, we have had